In today's episode, we're going to try and understand exactly how the banks view your income when applying for a mortgage loan. There are a number of different income streams beyond a basic salary that the banks can take into consideration when calculating your affordability for a loan. Today, we'll try and break that down and understand how the South African major banks view these incomes and specifically look at the percentages that they apply to these incomes. I think this is one of the things that is not understood, is that they actually factor those incomes, and don't take them in a rand for rand value. And then also understanding how they recognize them, when they recognize them, and if they can actually be used towards the mortgage loan application. So let's look at the basic, most commonly found application. That would typically be a salaried income earner. Now, your salary income, this is easy to prove. You'd simply provide your payslip as well as corresponding bank statements, and the bank is able to check your payslip and check that it corresponds with your bank statement. And if they have any doubts, they may potentially ask for your employment contract. These are sort of standard run-of-the-mill things that we see. Now, you may be a nurse working overtime, or you may be a salesperson earning commissions. You may have a rental portfolio and be generating rental income, or you may be getting maintenance and thinking, well, is my child support maintenance, can this be used towards a bond application? And these are the things that I want to dive a little bit deeper into, is not just your normal salaried income, but the additional sources of income and how the banks view these and how we can prove them when applying for a mortgage loan. Let's deal with the first thing, where you say, okay, well, Rowan, I earn a fixed income, but I'm not paid monthly. I might actually be paid weekly, or I may be paid bi-weekly. I'm earning wages rather than a fixed monthly salary. Can I still apply for a mortgage loan? The answer is yes. The key here is consistency. Whether you're earning weekly or whether you're earning bi-weekly, consistency is what the banks want to see. They want to see a pattern of recurring income. So, whether your salary or your earnings are paid monthly or bi-weekly, as long as there's consistency in that and they aren't varying greatly, and if they do vary, there's explanation for that. They may just potentially look at a longer period. So they may look at a 6-month period as opposed to a 3-month. If it was a fixed salaried income, they may, just extend that period of your bank statements. But yes, you can certainly use that income towards applying for the mortgage loan. The 4 major banks in South Africa, they have different, sort of scoring in that regard. Some of them view you differently if you are their main bank client. So meaning that if you are a FNB client and you bank with FNB, they may look at a shorter period as opposed to an external bank may look at a longer period. And that's simply because they have control and eyes of your statements already, whether you provide them to them or not. Because you bank with them, they can see that consistency, and they may have some form of internal credit scoring already running against your profile. Another question is overtime. Overtime greatly boosts income in instances where people are paid higher rates for overtime than the standard rates. We very often see this in trades. For instance, in the medical field, someone like a nurse may be paid overtime at a higher rate than their normal salaried working hours. This can definitely be used, but it must be reliable and not be a one-off. So again, must be something that is repetitive. We want to see that it's been there for consecutive 6 months. If there is a gap in overtime, meaning you were on leave, or there's some explanation as to why you're not earning overtime in a particular month, that's fine. But they want to see a sort of consistency, 3 to 6 months generally, if you apply all 4 banks thinking. And they would take about a 3-month average. They might look at 3 months, they might look at 6 months, but they would take about the last 3 months average. So that income can certainly be used. Commission. So speaking to people like myself that are largely dependent upon commission earnings, commissions can also be taken into account. It does become tricky when your commission becomes more than 50% of your income. So when your commission exceeds your salary. When I say tricky, what I mean by that is then the bank may start applying other rules whereby they say, I'll take the latest example I can remember was ABSA would say you take 6 months, you drop the highest commission value, you drop the lowest commission value, and you take the remaining 4 months the average of the remaining 4 months, and that they would deem as your commission. Some of the other banks, I think FNB takes your lowest commission value over the 6-month period, and they will apply that to all 6 months. Again, if you're in a position where your commission income is lumpy, so meaning that you get bulk payouts in certain months and other months lower values, that could be problematic at a particular bank if their scoring doesn't allow for that. But generally speaking, commission is always taken into account, but some banks may be stickier than others as to how they actually view that income. As you know, making this sort of content isn't easy. We wouldn't be able to do it without the support of our local partners and sponsors. This episode is sponsored by Mortgage for You, a mortgage origination business based in Cape Town that does mortgage bonds right across South Africa. Mortgage for You has been integral in the growth of our business. They've helped us with all the expats from abroad looking to finance property in South Africa, and also assisted our local clients for the past 10 years. Their service is unrivaled. Mortgage for You can assist you with a pre-qualification and also the formal application to the banks. It's always good to get involved with a mortgage originator very early on in the process so they can understand your financial position and make recommendations prior to lodging an application for mortgage finance. Hop over to www.mo4u.co.za to check out their website. You'll find different cost calculators there that assist you in calculating your affordability, bond repayments, transfer costs, and there's also the opportunity to reach out to Esme LaRue, who's the head of that business that will assist you personally with all your mortgage needs. So thank you to Mortgage for You for supporting our channel and for sponsoring this episode. Shift allowances, these are things that are taken into account for rostered workers. So be sure, again, consistency is what the banks want to see. They want to see that there's some form of a pattern. Where things get more complicated between the banks here is if that shift allowance is seen as a fringe benefit. So if it's a fixed cost to company and it's a fringe benefit, some banks will take 100% of that into account, whereas some banks will drop as low as 60% of that portion of your income. Another question is often annuities, pension, investment incomes. These are almost all grouped together as investment incomes, and whether these can be used, yes, they can. As long as you have proof of them, most banks will take them into account. I think there's one or two that actually discard that investment income in its entirety, but the 3 out of the 4 major banks do take that into account. Sometimes they might apportion that to say that they won't take 100% of your investment income into account, like we will see with some of the other forms of income, like we've mentioned, commission. They don't always necessarily take 100% of that value. The same happens with your investment income, but it can be used. Bonuses is something that is slightly trickier. Bonuses, generally speaking, if it's an annual bonus, the banks won't take that into account. If it's an annual bonus that then gets paid out consecutively, so over a 12-month period, so let's say in 2024, you received some form of a bonus, but the payout is during the 2025 year and it's paid monthly, then they will take that into account. But if it's a quarterly or a biannual bonus, or an annual bonus, you can safely say that probably won't be taken into account for your application. Again, even where they are taken into account, they are very often factored downwards. To give an example, one of the banks actually drops even if you're getting a monthly bonus, they'll only factor 80% of that. So meaning if your bonus is 10,000 Rand, they will only take 8,000 Rand towards that affordability calculation. Quarterly bonuses, they can come right down to 25% apportionment. So bonuses, one of those ones that can be used, but the banks are, again, there's quite a significant change in the way that the banks view that between them. Maintenance, commonly referred to as child support. This is one of the big questions we also get, is whether sort of separated parents can use maintenance towards their bond application. And they certainly can, but there needs to be ironclad proof of this. Remember, it's the maintenance is not necessarily something like a salary where you can provide a payslip. They would have to generally rely upon the divorce decree and bank statements, to prove this. But there may also be expenses that are offset against this income. But as a rule, yes, maintenance can be used. Some of the banks will factor up to 80% of that maintenance when using it in the application, but some of the banks actually will discard it. So FNB no longer uses it. ABSA will use up to 80%, Nedbank 50% if there's a court order and bank statements to support it. Standard Bank, if there's a court order and maintenance agreement, 3 months bank statements. So the picture here that I'm trying to create is that yes, it can be used. Again, looking for these patterns that we're talking about. And if you have divorce decrees, court orders, these things are all additional proof that you are entitled to this maintenance. It can certainly be used. Rental income, another big supplementary source or additional source of income often used in applications, can certainly be factored in. If you're wanting to use your rental income as a supporting income for your application, be sure that you have your lease agreement and bank statements to verify, like you would have a payslip and bank statements. Just remember that not all rental income will be taken into account. And for property investors, this is probably one of the big ones that you need to focus on, because if you're going to be building a property portfolio and you're looking for that rental income to sort of compound and grow, be sure to consider which banks support these well, because some of the banks will take the full rental into account. Some of them will only take 60% of that rental into account. But the big difference here comes in with future rental income. So ABSA and Nedbank have taken a leap here where they will actually take your future rental income for the property that you're looking to acquire into account too. Obviously, this property needs to be acquired for buy-to-let purposes. You can't be buying a property based on its future rental income, but then moving into it. It needs to be for the purpose of future rental income. And I'm going to be doing a video in future, particularly about this, because if your goal is building a strategic property portfolio, aligning yourself with the correct financiers is important. I don't want to overwhelm this video with that discussion, but rental income is an additional source of income that can be used. We've covered the weekly wage earners. We've covered overtime, commissions, bonuses, maintenance. We've covered investment income. So I think that that should cover all of the sources of income. Remember, if you're saying, well, what if I'm self-employed? Again, that would be your primary source of income, and there's ways that the bank would look at your income, especially if you are a sole proprietor. There may be more in-depth analysis of understanding what your actual earnings are rather than profits, because you may be covering some of your lifestyle costs or benefits, like things like fuel in the operation, the way that you generate your income. Some of these costs may be covered by your business, and you may be paying yourself a lower salary. The banks need to understand that, and we need to motivate and explain to them these things. But self-employed people, where that's the predominant source of income, that's a whole nother discussion. But you could be running a side hustle too, where you have a sideline business. And again, you want to use that income to supplement. So you may be, let's go back to that example of a nurse. You may be a nurse working overtime. So you earning a fixed salary. You earning overtime for the overtime that you're working. You may be getting some form of a shift allowance when you're on standby. But you may also have started a business on the sideline where you are. One of my clients recently is in a similar scenario, and she's now involved with supplying the products for the these IV bars. You see where people go for rejuvenation through IV bar for vitamins and minerals and things like this, and that's now become a sideline business. We can certainly use that income if that business is showing income. Is keeping proper accounting records, that income can also be used. So you can see that having a pay slip is one thing, but all of these other additional sources of income can also be used. So I hope this helps you understand the additional sources of income that you could potentially put forward to maximize your application, but also to stress the importance of a mortgage originator, because we can carry on, and every single one of these elements that we've covered, these sources of income, have a way to be verified. They have a way that they are portioned in the bank's eyes, and then a way that you would motivate for inclusion for them into the application. So it's important that you make use of a mortgage originator that can match your particular circumstances to the credit scoring and criteria of the appropriate bank, because depending upon your circumstance, your qualification may vary significantly between banks depending upon how you are scored and how they view your income sources. Hope you found this helpful. If you have, please share this video, like and subscribe, hit the notification bell to always get the latest videos that we produce, and share this with someone who may find this useful. Thanks very much. If you have any other questions, please pop them in the comments below, and we will answer them as best and as soon as we can.